traders, Raghee here. We're going to kick this premium video off with a review of the alerts that I sent out today. There were quite a few. And I also sent out a supplement, a video that allowed us to look at what I felt I did right and what I could have done better this morning. You know, I straight up, some days I play the game, most days by far, I play the game and say, yep, I brought my A game and I was seeing the field really well. And today, that supplemental video and some of what we'll get into here now really tell me that I didn't see everything I needed to see. And I think I had a little bit too much target fixation on, say, the S&P and the NASDAQ, which was something that I discussed in that video that I sent out midday. And we'll touch on here today as well. All right, so starting with the very first alert, and it really does kind of walk you through not only what I was seeing, but what I was thinking. And if you kick this off with the very first alert that was sent out at 9:42 a.m. Eastern, I sent out the notes link, and a lot of you have been asking me, Ra, we want to see those notes links again. We love when you keep those for us, and so I'm trying to get back to that. And so we sent out those session notes, and everything I'm talking about and we discussed throughout the day is also in those notes. All right, so 9:48 a.m. Eastern, there is no clarity on the risk or direction, right? Risk and direction of the indices from the currencies today. Note where the yen is not. It's not at either extreme. And what we had today was a very, very, very strong US dollar. And so everything else by comparison to the dollar was weak. But even if you sort of take the dollar out and look at the lineup of the currencies, you will notice, and let me show you a couple of these shots. And I think these are all this was from today. Okay, here you go. Here's one of these, and this was one that I captured and sent out to all of us, I believe at 8:55, or was it 9:55? It might have been 9:45 Eastern. All right, here we go. So this was one of the images that I sent out. And what you'll notice here is that the yen is not weak relative to the other currencies. What do I mean by that? If this is the strongest here, right? So this is strength. This is weakness. The yen just happens to be the fourth strongest currency, and as the day progressed, it actually got only stronger. Take the US dollar out of it, and then say first, second, third, fourth, fifth, etc. Right? You can just give everyone a place, sort of, and you realize your top three currencies were the New Zealand dollar, the Canadian dollar, and the Japanese yen. Your weakness stories were over here. So the yen was not weak. It was weak by percentage. And a few times this week, we've had situations where the US dollar is either very weak or it's very strong. And these percentages, while usually are very reliable to say, hey, if the yen is up 1% or greater, up or down 1% or greater, you've got a pretty significant move. But when the US dollar is making a big move like this, it throws that off. And you really have to stop and say, okay, let me remove the dollar from the lineup and just say, okay, 1, 2, 3, 1, 2, 3. And no, the yen was not weak today. Hence, we had a little bit more bearishness on the open. Not to mention, we were trading below the volume-weighted average price, and we were trading with red grab candles, and we were trading below the mean. And a lot of the tools that we would use were indicating that things were initially quite weak in equities. So I did put out the Forex contrast list, which was look for US dollar buys versus the pound, the euro, the Australian dollar, and the Swissy. Which, by the way, as long as you focus on dollar strength, for the most part, the market was structured, organized in that way. It was really just waiting for a correction of those trends. That's the contrast watch list that I explained and taught in the Forex Freedom class just 6 weeks ago or so. By 9:59, almost 10 a.m. Eastern, we put our first trade out there, which was a 15-minute Euro-US bounce short. Another 15-minute Aussie-US bounce short. And these trades really just were excellent setups. It was just a matter of waiting for the market to come back to us. And it really didn't. We had small moments of time where they came back to the wave, but just not the terrific follow through we were looking at from the onset. So nothing that hurt us, but just not something that we really were able to catch up to on the 15-minute time frame. All right, so that takes us then to the first setup for the equities. All right, so we get through the handful of currencies. I already acknowledged that the currency lineup really wasn't indicating a clear risk on or risk off, a clear direction, bullish or bearish, but we had enough by way of our indicators to say the NASDAQ was a viable short. And it was, for the most part, in the morning, a viable short. And so we looked at the V-score, we looked at the VWAPs and said, let's look for a fade. And ultimately, that fade could not hold through a number of key levels. One, it could not hold through the V-score extreme highs that we had plotted earlier in the morning, namely just over +1. And it could not hold below the clearing range high. So when do we know essentially we're wrong? Through there. That's when we know we're wrong. That's when we know the markets have broken above what is, generally speaking, sort of the psychological threshold. This is a threshold right here, where it's bearish here, it's bullish here, and we went bullish once we took out that clearing range high. So at that point, we knew that pullbacks to the VWAP, preferably with the V-score. So what's the VWAP? These three time-based volume-weighted average price lines and the V-score right there. And we've done this before. This is once we get the initial balance breach, which we did. Here's your high, here's your two highs. And then once we took out that high, meaning the high for the first 60 minutes of the day, once we take that out, right? We did right after 11 o'clock. That's an initial balance breach. And then that allows us to play the volume weighted average price as a buy entry. So this is stuff we've done many times before. And that was one of the alerts that I sent out later in the day. Now, it happened fast. You notice it was really about 5 or 6 minutes. And I would have liked to have given you guys more detail. That's one of the challenges of not being on the mic, walking you all through things. But those of you that are with me know that we're buying calls on these pullbacks. We want to be able to give this market some latitude. To me, that was like, I didn't want to see a precipitous drop through 72.20. That doesn't mean my stop is at 72.20. It just means I don't want to see a big drop through there. I really should have said 7,200 in hindsight, but these are the things that you try to make quick, get the alert out, and sometimes I can't get all the detail that I want. But when you have an option and you're on your own managing this with an alert, realize that I want you to have some tolerance to about being comfortable losing about 10% of your premium value. Okay, I want you to be comfortable losing about 10% of your premium value up to about a quarter. And I don't want the overall impact, and that's the option itself, right? So this is the value of the one option. You might have bought in 10, I don't know, right? You could have bought 2, but that's what the one option tolerances are. For your account, your tolerance should be somewhere along the line of no more than about 2.5 to about 3%. Some of you might go above that, but that's really sort of your starting point. You don't want a loss to involve more than 2.5 or 3% of a loss of your account. And you don't really want to lose more than about 10 to 15% of the value, 10 to 25%, sorry, of the value of that option. So that's where knowing those numbers, and I use those numbers consistently, knowing those numbers allows you to not freak out because the market made a slightly lower low by about 4.5 points, I believe. Below the 20 psychological level, okay? About 4.5 points. I'm not losing sleep over 4.5 points because I'm not losing more than 10 to 25% of the option value and certainly nowhere near 2.5 to 3% of my account value. So this is where the math, what we call the market money math, this is so important. This is why I dedicated an entire class to this. This is where the math matters. The market money math matters. All right, so this actually ended up being a really nice little trade for us. And again, once we took out the initial balance breach of the, again, the initial balance is the high to low range between 9:30 and 10:30. The breach is taking out that high or that low. All right. So that was pretty much what we saw. And I sent out just the NASDAQ. All right. And then that way you're just managing that one trade. And I sent out a number of sort of management alerts about throughout the day of, when would we know we're wrong? How much do we have to tolerate? In fact, at 10:30, I explained that I will tolerate usually no more than 10 to 25% premium value loss when day trading options. Okay. I don't mean 10 to 25% cumulatively of maybe 5 options that I bought. That's the account drawdown that I'm talking about. 10 to 25% of the individual option, each one, their premium. And I don't want that cumulatively to exceed 2.5 to 3%. It could be more. 5's usually my cutoff, but start with 2.5 to 3. You don't want any one trade to really leave more than just a scratch on your account. You don't want it to really ding your account. The other thing that we looked at today, and this was grand opening, grand closing, straight up, and that was looking at the bond market. Now, I do want to get long bonds. We tried to get long as day traders today. That was, like I say, grand opening, grand closing. I will look again tomorrow. And I think a lot of folks are asking, Rog, are we done with bonds? I'm not. I think that this is still a very bullish market. Just it happened to have a day of a lot of outflows. For whatever reason, today was one of those days traders were liquidating bonds. Are they liquidating bonds to put into the equities market? Are they liquidating bonds to put into the US dollar? Are they liquidating bonds to put into gold? I don't know, but we definitely saw the flow. If you look at what's happening with yen, dollar, gold, and then the equities markets, clearly we knew where the flow was. Gold, equities, and US dollar. And treasuries just might have lost out in that, right? Nobody wanted to put capital into treasuries. I still want to buy treasuries. I think the way we sold off might create a little bit more weakness tomorrow and possibly a pullback deeper into the wave, which I would prefer. Okay, and so tomorrow I'm looking at putting some capital to work in bonds, either with, of course, with options right now, just from a safety standpoint. So what we're going to look at are calls. We're going to pull up the options chain and look at the money calls as the bell rings. The thing to remember is if you want to get into ZB calls, you can trade those at hours far more generous than the 9:30 to 4 that are going to limit your TLT trading and the options on TLT. When ZB, when the US 30 years trading, the options on it may not be as liquid as they are during the US Open, but they will be available, just not as liquid. All right, so we are going to look at TLT. I get a lot of questions about gold. Gang, I'm not sure that I'm ready to get back into gold yet. I don't have structure. I know that we've had really good luck continuing to see the market sort of cling loosely to the 200 EMA. But I think what we're seeing a little bit better is this market not willing to break, as it hasn't in a while, the zero of the V-score. Remember, the V-score is measuring volume weighted average price, and volume weighted average price prioritizes support and resistance not just according to highs and lows in price, but volume participation at certain prices. Very different measurement. Okay, volume-based studies are not all that popular. We did a class on this back in 2019. This was the perfect, well, we did this in somewhat in the perfect exits class. So was that 2018? Gosh, I totally lose track. I guess it was beginning of 2019, the submarket sonar class. And so we started talking about volume weighted average price and volume tools. And there was a tool that I started using many, many years ago, calculated by hand, and that was pulling a Z-score on the volume weighted average price. And I got really curious about the way in which indicators could measure standard deviations. When were indicators suggesting the market had wandered too far away from a mean, or two, above or below. And then I thought, wow, there aren't enough studies prioritizing volume and the standard deviation studies. So that was where pulling the Z-score on a VWAP came in. Nothing complicated. I know it sounds fancy, but I'm an English major. I just got curious and ran the numbers. It's not difficult to do. And you should get more curious. Think about what kind of indicator would you like? Make stuff that you want to use. You'll notice that most of my indicators are indicators that I created because the ones out there just didn't do what I wanted them to do, right? So get curious and think, I want an indicator that's going to tell me this, and this is how I want to measure it. And it's actually a really good exercise, by the way, as an aside. Okay, so that was kind of grand opening, grand closing on the day trade, which hurt us very little. We were right on top of it. We were giving it, as I like to say, a tight leash. Very little room to move, very little latitude. We had the day trade that came up later on in the QQQ and the SPY, and then, which was actually really nice. And that particular trade did line up with something that Neil talks a lot about in the room, which is the 12:30 Central or 1:30 Eastern. I look for that 12:30 trade timing, not exactly the same trade, but I look for the timing and support from 12:15 Central or 1:15 Eastern to 1:30. So yeah, Neil's on Central Time, so he talks about the 12:30 Central trade. So that's the same thing as me talking about the 1:30 Eastern trade. But I start looking for that around 1:15. I don't wait for 1:30. I'll start looking for that at 1:15. And if I'm getting support levels that are sort of jiving with this expectation for a bounce at that particular time, it gives me that much more confidence to take the trade. In this case, time and the volume weighted average price and the fact that we had the initial balance level giving us bullish directional bias and the V-score. And that's why I sent out that midday alert, which actually made the morning's loss. It took it all back and then some, which was kind of great when we're able to dig out of the red like that on cumulatively all the trades of the day. All right, so we talked about scaling out, and that was pretty much the day, right? A lot of folks are asking me, is this the bottom? I do not believe so. I really don't, because you'll notice a few things. Options premiums are still insane. When we were looking at the QQQ and SPY calls at 115, they are still very expensive. Spreads are very wide. Volatility is still very high. And I believe all we really did was bounce a very little bit off the range lows of the S&P and the NASDAQ and the Dow and the Russell. We're not at the range highs where ideally our shorts will be set from. We're at the range lows. Okay, you can see the boxes that I've drawn on this chart. The other thing to take note of is we literally watched the U.S. government, now on the heels of the U.S. central bank, throw amounts of money that are even too difficult to even imagine. Yes, they're quantified with words like billion and trillion, right? But I mean, this is an immense amount of inexpensive money we are throwing at this problem, which is great. I'm not rooting for that, against that at all. But look at the reaction from the market. I mean, if this was, oh my gosh, we've saved the day, why, look, we were capable of moving 3,000 Dow points down yesterday. So to say we could get a 4,000 point rally, which I know sounds ridiculous, but we sold off 3,000 yesterday on the Dow index. And that's all we could muster today. So what I'm trying to say is this is a very unimpressive reaction to unprecedented expectations. And I stress expectations because there is a long, long climb ahead before this becomes something I think we're going to see. And that might be some of the hesitation from the market. I do not believe the lows are in, but I don't think the speed of the drop is what we'll see again. But remember, gang, we don't know what the economic impact fully is of this. We don't know what the health impact fully is. So please don't start thinking just because the government's throwing money at this issue and the Federal Reserve is preparing itself ideally from a rate standpoint to buy corporate debt, commercial paper. That's what that's all about. They've been funding, they've been, finding ways to make the overnight repo work. I mean, look, at the end of the day, we have a lot that's going on to help shore up the economy, but this is a macroeconomic problem as well, and it came first. And so if you have an economy that's sort of limping along, even though the stock market is not reflecting it, and something like coronavirus comes in, you really get to see how resilient your economy was and how healthy it was in the first place. And gang, I'm not being a naysayer here. I've said this for the better part of a year and a half. The macroeconomic data is horrifying. We just have an environment where the stock market is strong. Okay. So anyways, I won't harp on that. I know we've talked a lot about that in the past. I don't think the big swift drops are going to be the norm, but we are not at a low, gang. In fact, we put in a lower low today on Dow futures, but I do not believe we're at the lows. So let's stay vigilant. Let's stay aware of the risk that's still out there, and stay nimble and smaller in size. Okay. Sometime in the future, by the way, and sorry this premium video is running so long, but sometime in the future, yes, gang, when I start putting capital to work, not that I'm here to guide you on that, I'll just tell you what I'm doing because, well, I've chosen to trade in a fishbowl and, goldfish can't hide and I don't want to either. So when I start putting capital to work, I do have some capital that I have been wanting to put to work. When I do, I'll let you guys know and we'll talk more about the details of that and you see what does and doesn't work for you. But I will be transparent on what I'm doing with my own personal accounts. All right, that's it. Have a great evening. Sorry for the long premium video and I'll see you in the next update.